The broadcast is now starting. All attendees are in listen-only mode.
Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS and ESS BASIP. Welcome to introducing a crowdsourced funding services for accountants and advisors. Getting started with this product on crowdsourced funding is fairly easy. The package that you would receive as a subscriber includes a video. Please watch it and read the special paper we've produced on crowdsourced funding equity raising overview. And there's also a seminar or webinar that you can brand to present to your clients that you might want to play through first and read to familiarize yourself with the material. And what we've developed is a roadmap to guide you through crowdsourced funding. So quickly, I'll just put these key items up on the screen and then we'll have a look at them in more detail. Marketing of crowdsourced funding. Very important that you do some marketing activities. Is the company interested? The level of disclosure. It's important that your clients realize that there is a significant level of disclosure from the company, directors, managers and officers under this legislation. The investor categories. The role of the intermediary or the so-called gatekeeper, very important in crowdsourced funding. Making contact with intermediaries and determining which intermediary your client wants to appoint. The CSF offer document is the de facto prospectus. It's very important that it's prepared properly, professionally, and it adequately outlines the vision of the company. And once the company is satisfied with the CSF offer document, it then has to be submitted to the intermediary who has a specific role under the legislation to check that the offer document complies with the legislation. And then we're ready to go live on the intermediary's platform. Please remember that the intermediary has to be happy with the material to signify that they're prepared to allow the company's document to be shown on the platform. If there's any defects in the offer document, the intermediary has a role to play in making sure those defects are fixed. And at the end of the 3-month period or such lesser period that's been specified by the company, the intermediary will close the CSF offer, and we're going to talk about that. So let's have a look at the roadmap. We start with marketing. Please don't assume that your clients know anything about crowdsourced funding, or if they do, they will understand the community type of crowdsourced activities. Obviously, crowdsourced funding for equity raising is based on a significant section of the Corporations Act now, and everyone's got to obey the law. So we have an article which you could place on your website to communicate to your clients and prospects what crowdsourced funding is all about. And we have an article which we call Improving Your Bottom Line on crowdsourced funding, which we would suggest that you send to your clients and prospects to make them aware of what crowdsourced funding is all about. And we have a media release that you might like to send to your local media, whether it's radio, TV, or newspapers. The media generally like stories that are targeted at small businesses because there's a lot of small businesses around and they users of the media. So you'll normally have no trouble getting the media to seriously look at your news release. We have a package on social media campaign that you might care to use. And we have a seminar or webinar that's already prepared, ready for you to use. All you've got to do is go through and brand the PowerPoint slides and the handouts, and you are able then to present a seminar or webinar. These are the key items for you to implement to communicate to your clients and your prospects in your area, your region, that you're interested in crowdsourced funding. Clients won't assume that every accountant's interested in crowdsourced funding, because there are a lot of things outside of taxation that accountants don't show much involvement in, and clients know this, so you need to communicate to them. So after you've had the seminar or webinar or sent the material to the client, the time now is to sit down and have a one-on-one discussion with the client. Are they interested? And we have developed documents which will guide you through this process. Does the company really want to be a crowdsourced funding company? So we have a corporate information form that makes sure all of the information has been assembled, because this is all going to ultimately have to be included in the crowdsourced funding offer document. The directors, the alternative directors, company secretary, one of which must live in Australia. Has an auditor already been appointed? If so, who is it? What about the names of related parties, the directors of those companies? Were their accounts audited? So that form will guide you through this process of making sure that you have all of the information that is going to be required to prepare the offer statement. There's an eligibility questionnaire, and the key questions really boil down to, is the company potentially eligible for crowdsourced funding? And very importantly, is the company interested? Now, at this stage, hopefully you're going to get some sort of indication from the client. And in our proposed fee arrangements, if the business has started this step, we believe that a fee would be charged. In fact, we're suggesting it is in the commissioning fee at the very outset that the client has in fact paid for this first session. Step 3, the level of disclosure. There is a significant amount of disclosure for some companies, directors, officers or managers under crowdsourced funding. So the decision the company has to make is whether it wishes to proceed. And there's a couple of documents which we got here. We're going to show you one of these. It's a document that you can summarize the key information that has to be disclosed, because this is what the directors need to understand, that the documents are going to become virtually a public document. They're going to be listed on the intermediary's website that anyone that is interested in this company can go to and view. The documentation also requires a significant amount of information if the company director, manager or officer has ever had any problems with ASIC. That all has to be disclosed. So when some companies see the amount of information that they have to make available, they may decide not to proceed. So hopefully that documentation will assist you on that process. Step 4, the investor categories. Obviously this market requires investors just as much as it requires the companies. So part of your role would be to educate your client in what the respective relationships are with these investors. Wholesale and sophisticated investors do not get any special treatment under this legislation, as long as the documentation has been honestly prepared. There's not much more that I can say about wholesale and sophisticated investors. But retailing clients or investors is a whole new game. they are afforded special protection under the legislation. Within the ESS BIZTOOLS material, we have a form which allows you to undertake a complete overview of retail clients and a checklist for the retail investors, which we'll just click onto this one. So this is a form to help on the determination of investors. What the legislation does is lists the attribute of wholesale or sophisticated investors or professional investors, and then basically concludes that if an investor does not fit into one of those three categories, they are a retail investor. And just going back to investors, if they're a retail investor, they get various protections. There's a 5-day cooling off period, 5 business day cooling off period. The maximum investment that can be made by a retail investor is $10,000 in a 12-month period. And there must be very prominent risk warnings included in the CSF offer document and also on the intermediary's platform, the intermediary's website, advising potential investors that investing in shares in companies is risky. Step 5, the role of the intermediary. The intermediary is very important, and we have got forms which will assist you to talk to your clients about the intermediary's role, responsibilities, and powers. You do not deal direct with ASIC under this legislation. The intermediary or gatekeeper is the person you deal with. So let's have a look at this form. This is a summary of what a crowdsourced funding intermediary does. They are people with Australian financial industry licenses, and they're to perform a very important role as the gatekeepers. They check the documentation, the CSF offer document, before they upload it to their website. They must make sure that it complies with the legislation and also supplies information that an interested but not anxious investor might want to read. Step 6, contact with intermediaries. We'd be suggesting that your client should have discussions with about 3 intermediaries. We are assuming that sometime between now and beginning of July, the names of intermediaries that have been approved by ASIC will be available. And in most cases, I imagine that the accountant advisor would be advising clients of who the intermediaries are, especially if you've got any in your local area. And that contact should be made with them to determine, what's the intermediary's response to the company's pitch, what the company's trying to do. Is the intermediary got any specific requirements? Bearing in mind this is brand new legislation, we really don't know how intermediaries are going to react to the companies at this stage. So the company needs to decide which intermediary is going to be appointed and then enter into an agreement with that intermediary. The legislation does not specify the amount of fee that an intermediary can charge. It makes provision, of course, for the intermediary will charge a fee, but it doesn't specify how that will be calculated. Therefore, that is an agreement that has to be reached between the intermediary and the company, and that needs to be documented so that there's no misunderstandings. Step 6 is the contact with the intermediaries. So there's some forms to be utilised, and we have a form which summarises some of the matters. In fact, we looked at that one before. Preparing the CSF offer document. This is the de facto prospectus. The first thing that has to be done under the current legislation is for the proprietary company to be converted to an unlisted public company. Now, the government has announced that it is looking at implementing some changes in this space by allowing proprietary companies to be able to participate in crowdsource funding. But that is not expected to become operational legislation until at least March, April 2018. So in the meanwhile, you may have some of your clients who are happy to proceed under the current law. There are some people who believe the only appropriate corporate entity for companies to be raising capital from the public is as an unlisted public company. Indeed, Australian Small Scales Offer Board, ASOB, which has been in business for at least 15 years, has always had a policy of only supporting companies on their capital raising endeavours if the company had been converted to an unlisted public company, primarily because they think it's good corporate governance. It's a 3-person board. The constitution reflects what the company is trying to do, i.e. raise money from the public. And the company directors and management, they believe, have a better feel for the unique relationship that the company is going to have with its shareholders. Nevertheless, the government is pursuing the concept by the release of the exposure draft, and ultimately, undoubtedly, it will be tested in Parliament to see whether Parliament will approve of a further amendment which would then enable proprietary companies to become unlisted public companies. But that's in the future, and that is not the purpose of this webinar overview today. We have a summary of the key documents that have to be utilised to develop the CSF offer document, which, as I indicated earlier, will be placed on the company's intermediary's website. So it's on the intermediary's website that anyone who is interested in this company can go to and view. So your client needs to realise that could be a competitor. It could be a larger organisation that's interested in having a closer look at them. It is one of the costs of raising money from the public. There's a corporate due diligence checklist that we believe you should complete because it might unearth some matters that had been forgotten about. There could be options on shares, there could be special bonus arrangements that have been negotiated with a key employee. Hopefully the corporate due diligence checklist will flush all those types of matters out for consideration, because you don't want to have any 11th hour problems with the intermediary or with a potential investor. We believe that as part of the CSF offer document, companies will need to have either undertaken or brought up to date their market research so that comments on the market research as the company's directors see it can be included within the business plan, which ultimately will be part of the offer document. And once the market research is undertaken, a marketing plan should be able to be prepared. Now, both of these tasks we're assuming would be undertaken by another consultant. There's then the preparation of the business plan, which articulates the company's vision for the next 3 to 4 years. Where's the company going to go? How's it going to be run? Who are the management team? Who are the initial directors? How often's the board going to meet? What's the accounting policies? Human resources policies, and so on. There will also need to be prepared a budget and a cash flow forecast based on what the business plan vision states, so that an investor can see this is the financial outcome of what's summarised in the business plan. An information memorandum is required under the Corporations Act. This basically states how much money the company is trying to raise, what the costs of raising that money are, and what the money is going to be spent on. Within the ESS BIZTOOLS material, you have these documents that can assist you on this process. The CSF offer document working papers, which is a detailed set of document that you can utilise, the corporate due diligence checklist, business plan, budgets and cash flows, the company valuation. The company is going to need to be valued to determine the share price calculation. You'll probably need to coordinate with some other consultants on market research, marketing plan, and the intellectual property summary. Then you move into step 8, and that's the CSF offer document going to the intermediary. Obviously, the intermediary may have some questions, and there may be a requirement for some adjustments to be made. And we envisage that the accountant or advisor will be closely involved in this process. Step 9, the exciting day. The first day that anyone can go live is the 29th of September. And if you have businesses talking to you about helping them on this journey, well, that might be the end date, 29th of September, which would mean if they run their offer for 3 months, it will close on around the 29th of December. The intermediary has to conduct a communication facility that is operated by the intermediary, but the company directors, officers and managers have to be available to answer specific questions, talk to potential investors. And the facility has to be operated in such a way that a potential investor is able to talk to other potential investors, or indeed someone who's already made an investment, so that there's full open communication. Now the legislation goes into a bit of detail as to what happens if the documents are found to be defective. It's important that you are able to discuss this with the directors so that they know what has got to be done if a document is found to be defective. So we have a guide for directors on this process, advising them what is defective and who has to fix it. Now, in some cases, it might be an expert opinion that's been incorporated in the document. So there's a process for fixing defective offer documents. Closing the CSF offer. The intermediary closes the offer at the end of 3 months. That's the maximum period that an offer can appear on the intermediary's website, or at the date that has been specified in the offer document if it is a shorter period than 3 months, or when the maximum amount of subscriptions as specified in the CSF offer document have been received. The intermediary would advise the company directors that the offer is now closed and that a sum of money has been received which exceeds the minimum targeted amount. Incidentally, if a lower amount than the minimum target amount is received, the intermediary has to refund those subscriptions back to the people who subscribed for the shares in the first instance. The intermediary needs to confirm that the company has prepared or had prepared the share certificates for the new shareholders and that these have been sent to the company's new shareholders. The directors should be giving confirmation to the intermediary by writing, by email, that this has happened, and then the intermediary will transfer the net amount of the monies received. That's after the intermediary has deducted his or her negotiated fee from the gross amount received. So that's a quick overview of what crowdsourced funding system is all about. And that system is going to be very similar if the legislation for proprietary companies to operate in the crowdsourced funding arena is passed by Parliament and becomes operational sometime March, April 2018. So what more information would you like? You can go to our website, essbasip.com.au, and then click on the Crowdsource Funding Equity Raising Package, Learn More. And it has a number of comments, a video, and a webinar recording to guide you through this process. Your investment. And we hope that you will be making an investment and then using this product to offer an outstanding service to your clients and prospects. Now we're giving you a number of options here. You can subscribe for the standalone product package, which is available through ESS BASIP for $399, including GST. Or you could decide that you're going to subscribe for all of the ESS BIZTOOLS through the Gold package, which includes the Crowdsource Funding Equity Raising package. And it also includes a subscription to our very popular ESS BizGrants site. Or you could pay in 12 monthly payments of $261.80 per month, including GST. So to subscribe for the standalone package, all you need to do is to go to essbassup.com.au, click on Crowdsource Funding Equity Raising, Learn More, where we were before, for you to learn more. And then all you have to do is to click on to sign up for Crowdsource Funding Equity Raising Package now, $399 including GST. Or you can go to essbiztools.com.au and subscribe for the Gold package. And again, you have a choice. You can pay for the 1 year upfront discounted description or pay by the month. So you can pay the $2,970 including GST or the $261.80 per month including GST. If you've got any questions, comments, criticisms, etc., please send us an email, peter@essbiztools.com.au. Our commitment to you is we will send you a copy of this slide presentation and a link to the recording of this webinar. We will promptly respond to your inquiries on any matter to do with services available for accountants and advisors in the non-compliance area. And we will supply accountants and advisors with a range of business advisory services tools. Thanks for listening. Have a great day, and we look forward to welcoming your firm as a subscriber to ESS BizTools for the crowdsource funding product package or the ESS BizTools Gold package, which, as I said before, includes the crowdsourced funding package. Thanks for listening. Goodbye.